Hi everyone, welcome to today's video. So today I'm going to speak about a monopoly stock that is available at deep discounts. So probably a great buying opportunity in this stock. I will talk about the pricing, buying level. I will talk about what the major moat or the competitive advantage of this company is. I will give you an entire overview because this is a very good stock. Not a buying recommendation. I'm investing my money in it. I will present a detailed analysis. You take a call. Just take my inputs as one of the key parameters for you to make a decision. Go and research more about this stock. Now, before I jump in and reveal the name of the stocks and other details regarding it, let me very quickly take you through some key points which is very important for you to understand. Alright, so here are the facts. Top 7 out of the top 10 biggest companies in the world right now are tech companies. That's one. And that's not the magical part. The magical part is that these 7 companies have gained most prominence in the last 20 years. This should act as an indicator where the world is heading. That more and more technology is being used, due to which these companies are becoming richer by the day, and probably this trend is going to continue for a substantial future. Now, one of the key problems that we face when we start thinking about FANG stocks and other prominent tech companies is that the valuations are super high, right? So we get super scared in terms of buying these stocks. But whenever these stocks are available at discount, we should seriously look into it. And that is what many investors are also doing it, and that is what precisely I am also doing. Now, this brings me to the next simple point, that if you ask yourself that, hey, why have these companies become so big? Because there are thousands and probably millions of tech companies out there. But why these top 7-8 companies have become so big? The answer there is very simple. They are following something called a smart business approach. Now, this is not a term that I made. This was an article on Harvard Business Review. So I'm picking that term from there. The approach simply says that big tech companies, or at least the monopoly-like tech businesses, they have a very simple competitive advantage. They collect a lot of data. They are able to analyze and process a ton of that data, and then they create businesses out of it, an entire ecosystem out of it, which gives them a huge competitive advantage. Now, every time we start judging any tech company, we always have the argument that, you know what, tech company collects a lot of data, will turn it into profits. No, only a few companies are able to do it. And the company that I'm going to talk today has exactly done that, and it has become a multi-billion-dollar corporation from that perspective. So which company am I speaking about? I'm speaking about the Alibaba Group. I have personally invested in this company already. I'm not showing live investment, unfortunately, because I took a lot of heat from my mom and my mother-in-law saying that, you know what, don't show live investment, super risky, don't do it now. So I'm somewhat stopping it as of now, but I've genuinely invested in this company. I will show it to you subsequently at some stage when I put a compiled video of all my November investments by masking some details. Now, there are 5 specific points that I'll walk you through regarding the Alibaba Group, which will help you understand whether the Alibaba Group is a good investment for you or not. Alright, and since some of you asked me that, Akshat, which app are you using for making US based investments? I have zeroed in on Vested, and this is the app that I have been using for the simple fact that it allows me to transfer money very smoothly and very easily. Therefore, I am using it, and I have reached this decision by personally trying out a bunch of apps out there. And if you use the link in the description box to open your Vested account, you will get $10 free from Vested. So that's an additional bonus for you. Alright, so let's jump into analyzing the Alibaba stock. First and foremost, for people who do not know what Alibaba does, let me very quickly help you understand the business model. The business model is this. Alibaba connects buyers, people who are looking to buy stuff, with suppliers who are looking to sell stuff. They have done it. They started out as an e-commerce company and they have expanded into a range of different products. Let's very quickly go through Wikipedia page. This is a very important paragraph. Alibaba is one of world's largest retailers and e-commerce company. Cool. In 2020, it rated 5th largest AI company. Okay, artificial intelligence also. It is one of the biggest VC firms called as Ant Financials. The company hosts the largest B2B, C2C and B2C marketplaces. So essentially, it has expanded into multiple domains. Now you would say, Akshat, on some of your videos, you have spoken about the fact conglomerate business which are trying to do a bunch of different things, probably bad idea. Why are you so bullish on Alibaba? I will show it to you, but honestly, there are some companies that are truly exceptional. For example, Amazon has been able to successfully build its monopoly across different streams. Similarly, Alibaba has also built monopolies across several streams. It's very difficult to do it, create these massive ecosystems at such a large, massive scale profitably. That is the key word here. Because what happens with cash-rich businesses like Alibaba or Amazon now is the amount of cash that they make by undertaking their operation, they get so much cash that they are able to go and acquire new businesses. They are able to invest in R&D to create literally new technologies and systems. They are able to use that money to literally kill competition. So they become really threatening monopolies. Now here was one of the points that was outlined by a US commentator, and he said that Alibaba does what Amazon, eBay, PayPal, Google, FedEx, all the wholesalers and a good portion of manufacturers in the US do. And he was not kidding. Alibaba literally is involved in a bunch of businesses and it is doing almost all its businesses very, very profitably. I will explain it to you by giving you real examples as to why Alibaba has been able to build that moat or competitive advantage subsequently on the video. But for the time being, let me just quickly take you through the financials of the company as well. So if you take a look at the financials, in 2017, Alibaba's sale was 182.5 billion. In 2021, it's 820 billion, right? This is the trend that you're seeing here, very clear upward trend, very good sign. The second question that we need to ask ourselves, are they going profitably? So let us take a look at their net income or EBITDA, which is from 72, it has gone to 158. Again, very clear uptrend even in profit. So this company is growing profitably. It has cash reserves. It can pick up that cash reserve, acquire new companies, start new businesses, and literally start creating monopoly after monopoly. Then you might say that, Akshat, okay, we get it that Alibaba is a great firm, but then why? Tell me, genius, that it was trading somewhere around $320 in October of 2020 and the share price has come down to almost $165. Why is that? This sounds really scary. You get the answer on the Wikipedia article if you look at this particular paragraph. That in 2020, China launched an antitrust investigation into Alibaba regulators. And that was one of the episodes where Jack Ma probably was kidnapped, something happened to him, all that stuff. No one can know the exact backstory, what is happening with Jack Ma and President Xi Jinping. But bottom line is this, and this is what I could figure out after reading a lot of articles. In China, everyone started looking up to Jack Ma and he was gaining a lot of prominence, lot of power. He was acting as an inspirational figure and he was probably going to threaten the hegemony. Look up the word. It's a very interesting word of the day from my side. He was threatening the hegemony of President Xi Jinping, right? For that, Xi Jinping has been after his life. He has been after Jack Ma and Alibaba from that perspective. So then antitrust crackdown happened and bunch of different bad stuff happened, because of which the stock price tanked. Now you might be wondering that, okay, Akshat, if Jack Ma is being intimidated by President Xi Jinping, probably he will take out the brunt on Alibaba. A, it has already happened that the stock prices tanked quite a lot. B, we need to understand the fact that Alibaba is still a massive player. It is one of the biggest tech companies on earth, one of the biggest tech companies in China, and it is a publicly listed company. So even if Jack Ma is muffled by President Xi Jinping, someone will take Jack Ma's place and continue to run Alibaba. It is not a private venture. It is a publicly listed company that has taken a lot of beating due to the Chinese government regulations and policies. That was the first key reason for the falling stock price of Alibaba. The second key reason was a lot of backlash against China, that China's supply chain got disrupted. There was a lot of angst between US and China. So all those problems were happening. But the second key point that I want to drive home through this particular story of Alibaba is that Alibaba is still a very good firm because heavily profitable, good business growth, knows how to run a business. The only issue was the sovereign risk that comes with China, and that has been factored into the Alibaba stock. Now, this is one of the reasons why a person like Charlie Munger, who is a deep value investor or rather a value investor, he has invested a lot of his company's stake in Alibaba Group. Now, this is a very important article and it says this, that Chinese stocks have not tracked US shares while the Spider 500 ETF was over 25% higher in 2021 as of November 8th in 2021. The exchange traded fund reflecting 50 leading Chinese stocks that trade on US exchanges was approximately 14.7 lower. So there is a deep value buying opportunity in these type of Chinese stocks. Therefore, investors like Charlie Munger are heavily purchasing these stocks. On another note, I have a very interesting question for you and I would appreciate if you can respond to this, that why do you think Alibaba decided to get itself listed on US stock exchange? Research this question, drop down your comments. I will also post my answer in the description box after 3 hours of this video going live. Alright, so far we have understood the story, what Alibaba does. It is a conglomerate which is spread across multiple businesses. Initially, it started out as an e-commerce website and it has expanded into multiple domains. And it has expanded so well that it has created multiple mini monopolies. Second key point, is Alibaba a solid business? The answer is absolutely yes. There were temporary problems, they have been factored into the stock, so it's a good value buying opportunity. Now, let me help you further consolidate the point as to why Alibaba has a massive moat. What is the competitive advantage that Alibaba has? Now, for this, let me tell you a couple of good examples around the Alibaba's business model and how they have expanded into different verticals and domains. So first is the story of a company called as Ant Micro Loans. So for this, let me first tell you the story of Ant Micro Loans. You need to understand how this business was built by Alibaba and how they made it profitable. So essentially, as I spoke about, that Alibaba is an aggregator platform for buyers and sellers, right? So a lot of sellers who were selling their stuff on Alibaba, they were small scale or medium enterprise companies. They required a lot of loans. Now in China, the loans that were being given out, they were in higher quantum. So the amount of loan that was given out, there were requirements. For example, we will only give you a loan of $1 million. That's the absolute basic ticket size that we will extend you the loans for. That is what the Chinese bank said to these SMEs. But Alibaba had a lot of data of these suppliers, that how much stuff they were selling, at what frequency were they selling, what were their profit margins, bunch of different things. So what were they able to do? They were able to give loans at lower quantum. So instead of 1 million loans, they started giving out loans at 160,000 US dollars. Such a small quantum of loan, and there was massive demand for such loans. Second, they were able to manage their risks really well. Why? Because Alibaba was already a supplier-buyer platform matcher. So they had a lot of data on suppliers, what is selling versus not, what is the cash cycle like, bunch of other different informational stuff. So Alibaba was able to manage its financial loan giving risk to a very high extent. This is a very important snippet about Ant Micro Loans. What it says is that Alibaba's Ant Micro Loans had a default rate of 1%, while the world's average banking default rate is 6%, which is massive. By leveraging the power of data and utilizing it correctly, they were able to pinpoint and scout very good customers for their financial service and grew this vertical at a massive pace. Now let me tell you the second story of an instant messenger app called as Wang Wang, right? Wang Wang, right? This is my course website called as Wisdom Hatch. I have not advertised it much, so you can check the links in the description box. Alright, so over to Wang Wang. So essentially what Wang Wang does is that it's an IM, instant messenger app. Now as I was saying, that Alibaba connects suppliers with buyers. Now by creating a software called as Wang Wang, what Alibaba was able to do was that they were able to establish a communication channel between suppliers and buyers and make them interact on real-time basis. Now by creating such sophisticated softwares, it was able to increase its profit margin from a bunch of its existing platforms. Because think about it in this way, what is Alibaba trying to do? They are trying to match suppliers with buyers, and buyers might have a lot of questions from suppliers that, hey, what price, can I get some discount, bunch of different things. So by creating an instant messenger app, they were able to boost up its market share. Now taking it a step further, they integrated artificial intelligence on it, where they could do predictive analysis, what type of questions customers will usually have, and created like sophisticated systems around it to boost up its sales further. So this is how Alibaba has been leveraging the technology and the data it has to grow its sales and expand to different verticals. So now you might ask me that, Akshat, okay, I'm sold on the idea that Alibaba is a great stock to buy. What are the buying levels? Can you talk a little bit about it? Okay, in a minute, I'll do that. But fundamentally, what is the problem with Alibaba right now? Can it go to like $30 also? Any stock has inherent risk, no doubt about that. But my understanding is that whatever Chinese backlash had to happen, it has already happened. So fundamentally speaking, it is a good stock to buy. It might take some time to recover, but fundamentally it's a very strong company. It has an undergoing inherent tech play and it is available at a deeply discounted level. But the two prominent risks are Jack Ma's relationship with Chinese authorities, and the second risk is the US-China trade war. Usually trade wars do not work because that creates a losing proposition for the entire world, especially among strong economies. So I don't think this second reason should be playing out, but first reason is definitely a concern. So therefore, keep an eye out on Jack Ma and his relationship with Chinese authorities. But let's quickly talk about the buying levels for Alibaba Group. So let me do some technical analysis on it, and it's forming a very beautiful pattern. So first and foremost, this is the 200-day moving average line, right? So this is the 200 DMA, right? So the stock is trading way below its 200 DMA. If you check, this is the resistance zone, and it's forming a decent reverse head and shoulder. This is the shoulder, this is the head, and this is going to be another shoulder, and then it should give a breakout of up to approximately 225-ish levels. So this is my call on the stock. I am already an investor in it. I will show it in my investment November series. I will try to scale down my investment amounts as dictated by my mom and mother-in-law, but I am definite investor in this stock. I hope you enjoyed the analysis. Press the like button and I will see you the next time.